Chief Legal Officer Stuart Alderoty came out with a video unraveling the confusion about securities, investment contracts, and digital assets. So in this short video, it breaks it into its simplest form so that we all can understand and it can help clear our confusions. Well, so without wasting much time, let's get straight into it.
What do digital assets have to do with orange groves, barrels filled with whiskey, payphones? Who remembers those? And beavers? Well, it turns out a lot. None of those things, standing alone, are securities, but any one of them can be packaged into a contract for an investment that may be a security. Huh? Let me break this down a bit. The law lists a bunch of things that are securities. That list includes things you ordinarily think of, like a share of stock. Why is a share of stock always a security? If you own a share of stock in, let's say, Apple owes you a fiduciary duty, and you can hold Apple accountable if they don't fulfill those obligations. That's true no matter how you bought the stock or who sold it to you. But the law also includes something called an investment contract in the list of things considered a security. An investment contract is not like a traditional share of stock. And anyone who tells you that, well, let's just say they're trying to confuse you. Investment contracts are contracts that I sell to you with the promise that I'm going to take the money you gave me and do things to increase the value of your investment. I can take a bunch of orange groves and sell those to you. That's not an investment contract. Or I can sell you some of those orange groves as part of a larger set of promises to cultivate those groves, sell the oranges, and distribute the profits back to you. That's an investment contract. So, orange groves alone, whether I sell them to you or you buy them on an exchange, no investment contract. The very same orange groves, coupled with a promise that I sell directly to you, that I am going to work to make those orange groves profitable, that entire bundle of promises is an investment contract and therefore a security. But the orange groves alone are still just orange groves. Some would like you to think that a digital token can in and of itself be a digital asset security. It can't. Standing alone, it's just a commodity or a virtual currency. As a virtual currency, you may use it for a payment. As a commodity, you may trade it like gold or oil or pork bellies. Confused? Well, I don't blame you because some have been doing their best to confuse you for years. Because the Securities and Exchange Commission only has jurisdiction over securities, not orange groves, and they don't like that. Like a hammer, they want everything to be a nail. But the law doesn't work that way. While retail holders of crypto certainly deserve protection from bad actors, not all roads lead to the SEC. Pretending to have jurisdiction when there is none is simply a political power play. It helps no one. It hurts everyone. Remember, a token by itself, not an investment contract, despite what the SEC would have you believe. I hope that helps.
Treated digital assets as, commodities like oranges. Those in itself, they are not securities, they are commodities. Okay, so he has helped clear our confusion in that video. It's very simple in its simplest breakdown. I hope this has helped clear our confusions about investment contracts, securities, and commodities. If you are new to the channel and you are not subscribed yet, kindly subscribe so that you won't miss future updates and so that you can catch up with the latest trends in the crypto space, because that's the only way to stay up to date. If you find this video informative, do me a favor, like this video, share with your friends and loved ones. Thanks for watching, and I'll catch you in the next one.